Hey everybody, it's Leah Butler from eXp Realty. I'm going to do a quick snippet of just being able to give you what are the requirements of an FHA loan. Okay, every time I try to film this, it's like 5-10 minutes into it because I keep talking about all the other things that go along with it. So if you want more information after this video, then you just have to get with me. But the requirements for an FHA loan, just know that FHA is not a lender. FHA is the insurer of your loan that is provided to you by an FHA approved lender. So therefore, any loan that you get, your lender, whether or not it's a mortgage company, a mortgage broker, a bank, or a credit union, has to be FHA approved lender, right? We understand that. Okay. The next requirement in itself is that you have a FICO score. There are two FICO scores, well, guidelines rather, for FICO scores that you can use. The first one is between 500 and 579. People didn't think that they can get a loan between 500 and 579, but you can. You can use FHA, but you got to come to the table with 10%. There's no getting around that. You can't use a grant for it. You can't, you have to have your own in the bank so that the lender can see 10% of that particular loan. So people go for a slightly higher credit score. The minimum is 580 in order to qualify for 3.5% down payment. Now, the reason lenders ask you for a credit score of 620 or better is so that they can offer you a better interest rate, so that when they resell your loan, they can resell it for, it'll resell better on the market when they resell it, because all loans are resold, unless it's FHA, which they keep their own loans. But, most of the loans in itself are like resold on the market, just like stocks. That's exactly how it works. So if you have a 3.5% FHA loan, then you will have to have MIP, which is mortgage insurance premium. That mortgage insurance premium covers the lender. It is an extra payment that you pay in your payment, but it ensures that if you default, the lender can resell your loan because it actually has insurance to be able to cover for your default. That's what that MIP is. It's kind of like car insurance or life insurance or what have you. It covers the actual lender for loaning you that money. That MIP stays with your loan for the life of the loan. 30 years, 15 years, 40 years, however long you want to be able to get a loan for, that's how long it'll cover it. And it will stay with it until you refinance your loan out of that type of FHA loan. And you shouldn't refinance it unless it's like, 2% interest lower, or if you have 20% equity in your home already. Let's see what else. Oh, the other requirement is that you have to live in the house. If you can't have an FHA approved loan for a house that's investment, for a second home or vacation home or whatever, it has to be your primary residence. If you do, it's probably committing fraud, but again, that's between you, your lender, your tax person, and your God. That ain't nothing to do with me. I'm just giving you the facts. Let's see what else. Oh, your debt to income has to be 43%. And the borrower must have a steady job that pays, weekly, bi-weekly, monthly, whatever. It has to be steady income. And of course, they got to have proof of your income. Now, what I've been telling people is, like, if you want to use an FHA loan, you got to pay 3.5% down. So if you qualify for a better loan that's out there than having to pay a loan with MIP, why not do that? Why pay insurance on your loan? You would do that if you can't afford to have more than 3.5% down. But if you can, then look for other options, because there are other options out there. There are, conventional loans out there with 3% down. Some of them have PMI or MIP, same thing, but that's whether or not you want to use that. I mean, you have to look at what's best for you. All right. Have a blessed day.